Okay, this is going to be a game changer for y'all. Changes have come out for the renovation loan that is going to help more people be able to get into a home. So stick around to figure out how you can roll 12 months of mortgage payments into your renovation loan. But first, I want to tell you just a little bit about Brad, my lender partner, brad.follis.
Hi, I'm Brad.follis. I'm with Prime Lending. I've been in the mortgage industry for about 27 years and just happy to be here to talk about these changes with Terri.
And I am Terri Hayley with eXp Realty. I have been in the industry for about 20 years and have done more than 6,500 transactions, been a part of. So we'd love to share our experience with you and hopefully help you learn a few new things today. Okay, so Brad, tell us a little bit about the 203K or the renovation loan. Tell us what that's for.
Well, it's really for anyone when you're buying a home, if it's an if and or a but type of thing, that, hey, it's a great location, but, or man, at this property only if it had this.
Yeah.
It's a type of loan where what you get to do is purchase the home, but then also roll in renovations, changes, cosmetic, structural, to really make the home what you want it to be. So we see it as a way for opening up a lot of homes that are out there for folks to really see that may have been investor only or just a fixer-upper. Because this loan offers tons of changes and you get to personalize the home and really make it your own.
Gotcha. So those homes that you might see on the web were advertised as, investor special or a handyman special or something like that. It gives the average consumer who's looking for a homestead the ability to purchase that home, right?
Absolutely. You go make it what you want it to be.
So tell us, what's the new changes? What's changed about it?
Well, a couple of things. With many folks have heard of it, a renovation loan or under FHA programs, it's known as the 203K. There are two versions of that, the full 203K or what's called the 203K limited. The difference between those two with the limited is more cosmetic type of fixer-uppers or work, I should say. But what's good about it is that amount that you can do in that loan is increased from the $35,000 to up to now $70,000 improvements.
Oh, wow.
And it gives you more time to get those done. Now on the full, it's increased up to 12 months. And another interesting bit there is if it allows you, that is the program that potentially allows you to actually skip payments and roll up to 12 months of payments in. So if the home is needing habitable or uninhabitable to start out, such as typically kitchen repairs or bathroom repairs where it's not habitable, you can actually defer those payments, roll them into the loan until that work is done, potentially up to 12 months. So it's a really nice improvement.
Wow, so that's a game changer for people, right?
Absolutely.
So 12 months, so you could, if you found the right house, you could ostensibly roll 12 months of like a whole year of payments into that loan while the renovations are going on. You don't have to be in the home, and then once it's complete, then it's all like you wanted it in your dream state anyway, and then you can move in.
Correct.
So Brad, tell us a little bit about the financial part.
Well, what that enables a person to do is often if folks are going to purchase a home, there's stress involved with, well, if you want to buy it and then how do I fix it up? Do I keep money back? Well, this is all done under one loan. So the improvements are financed in. The home is appraised based on the improvements that will be done. So you're given credit for if we're fixing this or upgrading that. That's looked in to bring the value into it. So therefore, you're not having to worry about okay, I'm in this home and now where do I go get the funds to do this project or this project? It's done all up front and rolled into one payment.
Yeah, so then you're not like, maybe like putting it on a Lowe's or a Home Depot card or whatever at whatever percent interest they're charging those
Absolutely.
times, and trying to do it project by project and then paying off that project and getting the next one done, but also trying to get the kids ready for school or whatever it is that you're doing in your house in the mornings, and trying to get through all of those complications without the stress too of how are we going to finance this and how's all that part going to work.
Correct. You're not going to be dealing with, you typically will have, usually most folks will use one contractor. You can have more than one on certain projects, but that way, as you say, you're not at this type of store, this type trying to do it yourself. You're doing it all up front. You lay that all out before you purchase the home, and then the construction starts, and you're just one typical mortgage payment, just a standard loan.
Okay, so let's say you've found this beautiful dream home, but it's not quite what you imagined yet. But you can see I could do this to it, or if it had that, then then it would be perfect for my family. So I found that. So then what? What are my steps? What do I go from there?
Well, what you'll want to do, of course, is contact a lender that can provide these loans to be talking about the process. Simultaneously, you'll be looking to have a contractor that will work with your realtor and the home that's listed there to how much will it take, what type of repairs. And then basically your lender will take those together and just approve for that amount for this particular loan. And then it's really like a normal process, loan. It's a lot of times these loans are thought to be way more complicated. There is a little more complication than your normal loan, but if the parties involved with contractors, etc., if paperwork is turned in timely, it's really not a much of a delay at all. You can still move these loans and close them very quickly.
You don't want to put a 6,000 square foot home into a neighborhood that is, the most of the homes are 2,000 square feet, for example. And who is this loan made for? Who would most benefit from using this type of product?
Really for anyone, because again, it can be for both required and desired changes. To any property. But where I think in this markets, at least in our area, where this can be helpful is, inventory has been talked about, if not much out there. Well, I think there are a lot of homes that may or may not be shown because folks don't know that you could take it and turn it into this type of thing. So
right.
I think it's really, it can be for everyone.
Yeah, and so that makes sense for a home buyer who's buying a primary residence. Can investors use this, or are there any stipulations there?
For the FHA loans, investors cannot, but renovation is unlimited. It's available through us on 28 different loan programs.
Goodness.
From USDA, FHA, conventional, and on your conventional loans, it can be investors can take advantage of it, primary, secondary homes and investors.
Okay.
And really a unique offering that we have is we offer as well VA renovation loans. So our veterans can utilize this product and program for homes where a lot of times there may be homes that are not shown to veterans because it's a VA loan and the things that have to be done in the property standards. Therefore, they may not be seeing some properties that they could utilize this to get into a home.
Oh, nice. For those people who are unwilling to manage renovation changes, I think they would be out on that as well.
True.
And so you always want to partner with somebody who is done, something before, if you're learning something new, and with the right team. So tell us, Brad, just a little bit about you and your team, and why it would be important for people to think about those types of things when they're trying to figure out who do I use, or who do I go to for this type of loan.
Great question. And I mean, really the thing you want to look at is for someone that has the experience or the support behind them to do these types of loans. I mean, there are a few more things involved behind the scenes. Can be typically draws to the contractors, which is a great thing for us. All of that is in-house. We have a team that handled these, the draw departments that speaks to those folks. So it's really in second nature for us, in that we have that program built in. All of this is done in-house, and that's a great thing, at least from my perspective, versus where you might be having lenders that may have to go outside for certain parts of their process because you can do the loans, but they may be brokered through a channel.
No, I think that's a good point. And one point about people who have been in the industry or been doing this for a long time is, for example, one of the really cool things about this is that if you are renovating the home and you're taking things out that you could leave intact, like doors, cabinets, toilets, sinks, things like that, then you can have Habitat for Humanity come and pick them up. You can just schedule an appointment, have them come pick them up, and then they'll give you a tax receipt for that.
Oh, that's
and
awesome.
So there's a win-win as well. And so being in the industry a long time, you just learn some of these little things, and it just helps the home buyer so much more in that process. With contractors, how am I going to find that kind of thing?
Well, depending on the lender that you're working with, but in our case, we actually have a registered list of folks that we have done these loans with that are used to working with this process. So you can talk to a lender, hopefully they can refer some, or again, there are several different sources that you can seek advice. And I know from our standpoint, we'd be glad to help, but at least supply some names of folks that have worked at these types of loans.
Yeah, but it's not like a big, scary, complicated thing. We can break it down into smaller, manageable pieces and be able to move through those fairly easily.
Oh, absolutely.
Okay. I hear horror stories about the loan package, and then I'm going to have to sign over my firstborn, and I'm going to have to give you my blood type, and I'm going to have to do all this stuff. What do I have to do?
It's really not quite that bad. I mean, the loan process, of course, a lender is going to need to see, prove documentation, et cetera, that you can, qualify for the loan.
Yes.
Above and beyond that, I mean, it's really nothing extraordinary. Again, working with your lender, they should tell you what they need to see, and if you can provide that in a timely manner, then everything goes through. Your lender will work closely with you to get you approved, or tell you, hey, this is what we need, and should hold your hand to go through that and get everything put together.
Okay. But with these loans, I mean, there's a lot of paperwork and there's a lot of people involved, so it's going to take me a while, right? I mean, it's going to take me at least 3 months to close or something like that. Is that right?
No, like I said, if documentation can come together, I mean, these loans can be closed in 30 days or less. Now, we will advise folks, hey, it could take a little longer based on how quickly we gather everything. But you are, with a few other parties involved, as long as everyone is on the same page and knows the timelines, these loans, again, there's not going to be an extended delay of a 90 day window.
Oh, nice.
That, folks, they're closed in a timely fashion all the time.
Yeah. So, it would be like buying pretty much any home that you would find on the market that is, ready, that you could buy and close on in 30 days.
Absolutely.
Okay. So then when does the renovation part start?
The renovations start, so you basically are approved. You will close on the home. Once you close on the home, that then starts the clock, which again, depending on the program, but you might have anywhere from 6 months to 12 months to have that work completed. So after you actually close, you own the home, then your contractors and such come in, start that work, and you're off to the races.
Right. But during this time, I'm not making any payments.
That depends on the program, but if it's not habitable and you have deferred those, absolutely.
Okay. So there's a program that if you find a home that needs a lot of repairs and it's going to take a while to get in there, then you can delay your payments until they fix it and make it ready. But you've still secured the home. You've still gotten it off the market. You've still, made sure that you secured it at that price, and you don't have to wait on the future to see if it's still going to be available or that kind of thing.
That is correct.
Okay. So can you tell us about a real world example where somebody has done a loan like this or done some kind of project this way?
Yes. There's several actually, but oftentimes, and these are not just necessarily fixer-upper type things. Some have been as far as, they wanted an auxiliary unit for elderly parents to move into, converting a garage into a living space. A lot of these are more not only say required if there were repairs, but it's also desired improvements that can be done. So it's really up to the borrower. Even your standard loan, or let's say even some that if people want to put a pool in that's not there, a renovation loan, you can buy the house, put the pool in at the same time, all under one loan.
Gotcha. And just as long as it appraises.
Absolutely.
Now, Brad, doing these kinds of loans for a long time, and I know I've been in the real estate industry a long time, and I've seen a lot of pitfalls, things that we want to avoid. So can you tell us kind of what might we want to avoid in this type of situation?
There's really not a whole lot other than you want to be, of course, I think, cautious in choosing the right partners to work with, choosing reputable folks to do the work and making sure that they can do it in the time and the costs that they've stated. So and now there is a requirement of whom you choose as your contractor. We have a group that communicates. There's information that has to be provided, so there is a vetting process that goes through. So we try to help with that process, and it's a great thing about our program is that it's all in-house, and we're used to doing these types of loans, so it helps support the customers in that way.
If I have a budget in mind, is that typically what I would come to the table with, or do I need some cushion in it, or?
Well, actually, within the loan program, and that's a great question, there is a contingency that's built in of 10% for the amount that is budget, because anytime in construction, sometimes there are overruns, so there's always that's built in, hey, to make sure you're covered. But when you're being approved for the loan, it's going to be looked at the same as, okay, here's what you're approved for, and if this is your upper limit of your budget, right, and we're laying that groundwork to know that if it's the total project is X amount, then that's what you get approved for.
Okay, great. And then I guess I could share with folks too that you just you want to make sure that you're not over improving for the neighborhood. So you want to be able to make sure that you're gonna, if you are ever to sell the home, if it's not going to be your forever home, that you would be able to get your return on investment.
And aside from a lender, of course, you want to partner with a realtor that knows the area and has experience. Someone like Terri, who's been doing this for a long time and has been as well in new construction, so the full gamut. Having the experience of someone such as yourself to know and help and know what's out there and what things need to really look like in a certain area, I think is a great help. So always recommend folks partner with good people.
Yeah.
So if you're ready to turn any home into your dream home, please reach out to us today and explore all the options that are out there for you.
Thanks, guys. Talk to you soon.